Greetings, ladies and gentlemen. It's 5 o'clock in London. It's midday in New York, midnight in Hong Kong, 2 a.m. in Sydney, 9 a.m. in San Francisco, and 9:30 at night in Mumbai. Greetings, good morning, good afternoon, and good evening, depending on where you are in the world today. My name is Patrick L. Young. You are watching the IPO-VID live stream, Series 24, episode number 6. In the aggregate, that makes the fabulous GAN number for all those of us with the technical analysis disposition. Episode 144 starts here. Speaking of technical analysis, well, let's look at the world of quantitative maths, which lost its first genius this week of the trading variety. Jim Simons, a mathematician who became one of the most successful investors in modern financial history and died the other week at the age of 86. His biographer, Gregory Zuckerman, a previous Exchange Invest Book of the Week author laureate, also wrote the definitive biography of Simons, and he attended the funeral service, noting the rabbi at Simons' funeral memorably remarked, "I wouldn't exactly call Jim a regular around here. RIP, probably the greatest hedge fund manager in history." Meanwhile, down under, the Australian Parliament has a raft of submissions about the ASX chess mess. Some have been defending their actions. Most have been defenestrating the notion ASX is coherently competent. It's a worrying time. Will the ASX and the Australian Parliament finally act against the monopolist? Better news from Hong Kong. It's been a birthday week last week with China and Hong Kong enhancing Swap Connect on their anniversary. Roll on that renminbi exchange traded derivatives yield curve on HKEX. I can't wait. Meanwhile, a fabulous anniversary was celebrated last Thursday at the London Stock Exchange's Paternoster Square HQ. The FTSE Futures were celebrating their 40th birthday. FTSE Futures were launched on May the 3rd, 1984, with then LSE chairman, the revolutionary Sir Nicholas Goodison, ringing the bell to get trading underway. Since then, FTSE trading has been a staple of the LIFFE ICE Europe portfolio. Interesting to consider that the actual FTSE underlying index of 100 leading London listed shares was only launched on January the 3rd, 1984 at a base of 1,000, and they were trading futures on it within 5 months. Wow, those were the days. Happy birthday. Who knows where FTSE will be in the next 40 years. All the best to Kat Karamashi, a former IPO-VID guest, and her team, further developing the FTSE Index franchise of futures and options at ICE Futures Europe. Meanwhile, our own personal birthday, ladies and gentlemen, Exchange Invest has turned 11. I suppose that means we're getting ready to leave primary school. Thank you to all our sponsors and subscribers who've supported us throughout this journey to better understand market infrastructure. And meanwhile, the water cooler of the Bourse business, the Exchange of Information, is seeing a logo change. We're going back from our 10th anniversary logo, saying farewell to that lovely, celebratory, enjoyable icon, and we're returning to our normal graphical interface at the masthead. If you're not already a member of our parish and reading the Exchange of Information, don't forget you can sign up at exchangeinvest.com. We're offering a free 7-day trial so you can get your feet under the table and understand better what goes on at the water cooler of the Bourse business in the business of bourses. Today, ladies and gentlemen, I first of all have to offer a slight apology. We are recording this episode because that Earth curvature thingy just doesn't allow us to be fully live, on the grounds that our guest today needs some element of beauty sleep. Jason Sen, a seasoned trader, speaks. Jason is a 15-year life floor veteran market maker. He's almost 40 years experience trading. And what's the difference between an experienced trader, ladies and gentlemen? Well, the answer is that whereas in America it's easy to manage to get yourself a 40-year jail sentence, you can always manage to get some element of remission. You don't get that from being a trader. Jason has 40 years experience trading, most recently as a day trader and skilled technical analyst on screen from, well, I don't want to give the next bit away. We've had that in our bio, so some people may have managed to read that already. Jason, come on in. Where in the world are you today?
I'm in Phuket, Thailand.
Marvelous. I have to say, it's a fantastic backdrop, actually. Our production team have just been marveling. The ladies in production today have all been looking at it and taking hints. I think you've given us perhaps the best sort of Instagram-friendly backdrop of any trader we've had. Here it's looking very good. It's got great karma. Is this there to, I don't know, enhance the feng shui of your trading experience?
Yeah, I'm trying to figure out how to build my own private little YouTube studio. So I'm really glad that you noticed. Thank you for that.
That's great. Yeah, the first thing I noticed in the credits were rolling, I was noticing the fact that there was lots of back chat in the production studio going, "Oh, that looks very nice, doesn't it?" Ooh, yeah, we're all saying how interesting it is. So tell us then, Jason. We'll get to your YouTube studio building in a moment. How did it all begin? How did you get into financial markets?
Actually, I'm going to say two things before we start, if you don't mind, because
Please.
From your intro, I'll add that it's my birthday this week as well. I think that's the 4th birthday for the show.
Excellent.
I think you mentioned 3 before. Unfortunately, I'm 56, so I'm a pretty old man. And the other thing was, Patrick, the shot that you showed of the launch of the FTSE futures in 1984 on the old exchange and the Royal Exchange. That reminded me that the FTSE futures and the FTSE options were traded in 2 separate buildings, weren't they? And when you wanted to hedge your option, when the FTSE options local traders wanted to hedge their positions, they had to get on the phone and call across to the exchange on the other side of the road, didn't they? Is that right?
So that's a fabulous discussion, actually, because yes, FTSE options at LIFFE were launched in 1986, but they were not as liquid because LTOM, the London Traded Options Market, indeed, they launched options at the same time as the FTSE futures were launched. I think it's the same day or very, very similar. So you were talking about there was, basically 100 yards between the original London Stock Exchange building and the Royal Exchange, as you may remember. And therefore, yes, you had to get on the telephone. And then you also had a funny quirk because LIFFE FTSE futures were £25 per full point, and the cash settled stock options were only £10 a point, as was typical of everything. So you always had an issue.
Had a ratio.
Yeah, you had a ratio at all points in time that you had to do in order to manage to get your delta hedge. So yes, you remember very, very well. And in fact, it was a funny thing because even after LIFFE launched their FTSE options, the FTSE futures options tended to price off the back of what was the FTSE LTOM cash options. So they were actually kind of lagging when they were all in the Royal Exchange. Yeah, and then it took all the way to, first of all, LIFFE took over LTOM, and then LTOM merged in about March or April, around about the time, just before or just after, I think just before the Queen visited Cannon Bridge, when it opened, was the first time they were actually all in the same place. But even then, you had that weird quirk because the FTSE pit was kind of here, and the FTSE options pit was way over somewhere else.
There was no direct line of sight, was there?
No direct line of sight.
It was the only pit on the floor where the options and the futures didn't have a direct line of sight, which was crazy, really.
It was quite hilarious, and they were way over here. And I mean, my hand's disappearing out of the screen, and that's entirely apt because you couldn't see the two if you wanted to trade them both together, which was totally crazy. So it's funny how you remember very, very well these things. And actually, I was talking about that in Exchange Invest on Friday because we were looking at the FTSE anniversary and mentioning the fact that, first of all, it's incredible. I mean, they started calculating the index in January, and then they launched the futures on it within 4 or 5 months. Then there was the fact that the options were essentially trading across the road for the first 2 years. And also, they were on different tick sizes. And somewhere along the line, they rationalized the tick size. I actually missed that. I can't even remember when it happened. I mean, I think the FTSE futures now are £10 a full point as well. But it's such a wacky and weird way that things are put together. And with hindsight, you think that's totally insane. Whereas at the time, it was all just so exciting and new. Nobody remembers. Nobody cares. I was writing a footnote yesterday about Eurotrack. Do you remember that? Eurotrash, as we called it.
That rings a bell. Like, what was it? I can't remember.
That was 1991 or 92. And they introduced a stock index. So it was the 200 biggest stocks in Europe. And it was actually quite clever because it was the FTSE 100 plus 100 European stocks. So you could price it several ways. You could extract the FTSE 100 component from it. So very, very clever idea. But the difficulty was actually, I mean, you talk about trying to hedge the underlying was nearly impossible because you were paying double commission and a bit to, for example, hedge your stock in something like Deutsche Bank in Germany or any of the French stocks. And it just was, it was an idea vastly ahead of its time. It was way before people still woke up at that stage and thought, London, I'm in London.
Yeah.
I trade London stocks, and it was a footnote. Whereas, 10 years later with MiFID, it was also totally insane. Anyway, I'm doing too much talking here at the moment. Happy birthday. Let us say that first of all.
Thank you. It's good that you remember. I mean, you've got a great memory. You can remember the timelines and everything. I'm impressed with that.
Oh, it was phenomenal. I've spent so many of these years studying these things. Maybe it was because I just didn't drink as much as everybody else, or didn't have the capacity to drink as much as everybody else. But there you go. So anyway, ladies and gentlemen, if you haven't already guessed, and I mean, by the way, this is the point where I would like to appeal to you. Do send us a little love. Give us a bit of love over here, because that helps the AI indicators on YouTube and LinkedIn and X and Facebook and so on to push this to more people, so we can talk about and actually spread the word about how you can invest sensibly and coherently across the world's markets, and how good markets can be for everybody's financial well-being. And I'm sitting here talking to Jason, who I'm trying to remember exactly when I met you, Jason. I'm so sorry, I've forgotten, but I'm going to guess it's about 1988 or 89. And I suspect at that stage I was not on the LIFFE floor, I was actually on the LTOM floor. But I worked with Simon Haynes, and I remember Simon Haynes was a friend of yours that you'd known for many years before then, and that's where I think we met through him.
Well, I started on the LTOM, London Traded Options Market, in April 1987, and I actually Simon Haynes started like a month or two after me, and we became really close mates. We were at what was called Shepherd's and Chase at the time. I think they're WI Car now, or they were. Recently, and so we were option brokers on the LTOM and loving it. We were 18 years old, and then by Christmas of 1987, so we'd only been in the job for like 9-10 months, we lost our jobs, and I thought, oh God, it's my career over. I'm 18 years of age and I've been made redundant because, of course, the volumes collapsed after the stock market crash. But then, luckily, I managed to get a job at a market making company. So it was probably just after that I met you in 1988.
Yes. I think so, that you'd gone into market making. I'd actually, I mean, my gestation's hilarious because I'm not quite as long on the floor as you, but I had an interview on Black Monday with Tullett and Tokyo. And actually, had I not taken the interview on Black Monday in the morning, at which point in time it was hilarious because we could barely hear each other think when I was going through the interview because there was so much screaming going on down the road. And I remember famously the interviewer saying, "Oh, I'm terribly sorry that there's a little bit of a kerfuffle this morning. Things seem to be a little vivid," or something to that effect. And it was like
slight understatement.
Yes, great understatement. I got out the door, and the early issues of the Evening Standard were already saying, Sodom, Gomorrah, death, end of the world. So I remember, well, and actually, if I hadn't have taken that interview on that Monday, I would have never got a job because they said, start next Monday. Okay, great. And when I came in the following Monday, they're like, oh yeah, we employed you. Okay, we've got lots of paperwork to do. And about 2 weeks later, it was like hiring freezes. As you say, lots of people lost their jobs. I mean, it was a crisis. So you got into broking, first of all, lost your job. Then you had in a way, that was very, very propitious because that got you into market making. And
yeah, it was the best thing that ever happened to me, really, as far as my career is concerned.
Absolutely. So tell us a bit about that, because in those days, market making involved people standing there, and you'd all of these fantastic fan folds of pieces of paper, which were not there because you just happened to enjoy the art of origami. It was quite an experience being an options market maker in 1988 and thereafter.
It was. Well, the first thing I should mention is just how intimidating it was going into a pit on the LTOM. You weren't welcomed in, were you? It was an intimidating atmosphere, and you were fighting for the business. I mean, I was terrified. I don't mind admitting I was petrified. It took a long time for me to get used to that. And then, of course, you're trying to learn on the job. You're trying to learn how options work, how to put an option strategy together. Call spreads, put spreads, and butterflies, and you're drawing your P&L diagram and all this kind of thing. So you were really thrown in at the deep end in those days.
Yes, it's incredible when you think about it now, and people switch on a computer. They've got multiple screens, and then the computer beautifully draws them a three-dimensional volatility landscape of every possible prognosis. Yes, and everybody else was sitting there looking at the book, and they were all sort of drawing. It was like an etch-a-sketch machine. You were sort of going, right, I've got to get that, bang, 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 bang. Okay, that's much better. Yeah, it's incredible. And of course, also, even at that time, I mean, if you wanted to hedge anything, as you said, you had to call across the road if you were doing the index. If you were actually in an individual stock, you often had to run back to the booth or use one of those floors around the outskirts of the LTOM in order to manage to phone a broker market maker and get yourself some stock.
We did. Oh yeah, you'd run out the pit. I'd run into the booth. I think it was Kevin that was doing would do the stock hedges at the time, and he'd phone up, and oh god, it's really amazing going back to those analog days.
It's hilarious, actually. I think I do remember Kevin as well. Was Kevin a guy with glasses? Was that Kevin?
Yeah.
There were so many Kevins. Yeah, I haven't thought of Kevin in 20 years. I'm sorry, Kevin, if you're watching this. I do apologize. And suddenly, it's hilarious. I mean, sorry, ladies and gentlemen, we're just having an old-fashioned old blokes reminiscence here. But I turn up in Hong Kong a couple of years ago, and I meet somebody, and we're chatting away. And it's like, oh, we must have been really, really close. And then he went out for drinks with someone else, and he said, you do remember that was Patrick Young, who was 2 booths up from you on LTOM in 1988. And it's like, neither of us had remembered. And the next time he's like, do you remember? I was like, yeah, that was me. And I was like, oh my goodness, it's quite incredible. So anyway, the wonderful world of FTSE trading, I think they got together last Thursday evening and had, by all accounts, a remarkably, well, how might one put it, open outcry-centric evening at Paternoster Square as they were celebrating the FTSE. So what were you making markets in during your time on the LTOM and then LIFFE floors?
I went to a Dutch. I was hired by a Dutch company which was called Market Makers Group Amsterdam, MGA. They put me in something like British Airways, and I think I did 3 stocks at the time, and I was sort of under the wing of I think it was Simon Brown that was kind of keeping an eye on me. And I mean, it was 2 or 3 years before I made any money. It really took a long time for things to fall into place.
It's interesting. I mean, how in those days also the market making companies would have faith in you. As long as you weren't losing your shirt, they would be willing to let you bleed a little bit of money in order to manage to train you up, which is something that I think is not so true now. And certainly it always amuses me, these, all of these prop shops where they say, send us $250 and we'll let you trade Forex. And if you're profitable at the end of the month, we'll give you some money. And I sort of think, wow, that's quite a gestation period. Here I am nearly 40 years later. And I think, gosh, a month seems to me like a heartbeat in terms of your P&L over time. Well,
it's crazy, really, because obviously I've been doing this a long time, and I said it to some of my subscribers this week. The week before last, we had a terrific week. There was a potential to make 2,500 pips in a week, which is enormous by anyone's standards. And then the following week, I could barely get a decent trade together, and that's trading for you.
Yes, and it is, and it's so funny because I think the thing that always shocks everybody, and actually round at our little corporate empire, we do a Thursday morning teach-in where I orate and answer questions about anything to do with investment. We've been teaching every day, and I think the thing that shocks all of the staff, and I repeat it endlessly, is the fact that, remember, if you're going to be a successful trader, you're going to lose way more times than you're going to win. And actually, that's really the resolute issue you have to have. And actually, the absolute best of us, let's face it, sometimes they only make 2 or 3 times out of 10. But when they make money, they make unbelievable amounts of money. And that's the thing. So you go through the floor period. Well, there's an acceleration, 15 years. What happened then at the time? You were on Cannon Bridge. The floors were all closing in 1999. Sort of January to March was this really sad moment, even for people like me who wrote books like Capital Market Revolution saying, unfortunately, the pits are all going to have to die. Pits all closed. What did you do next, Jason?
Okay, well, I'd kind of had enough of trading options anyway, because as you know, you're just married to this book forever. You never really get a holiday because you're still managing your book before you go away on holiday. The number of holidays that I had to jump on a plane and dash home for. So I'd had enough of that. Oh, actually, having said that, I know that came about a few years later. The first thing I did was I was offered a job to trade the MIB options, the Italian options on screen, and it was great because all the Greeks were worked out for you, as you said earlier. All the Greeks were worked out for you on the screen. I was like gamma, theta, delta, and all this. And I've been doing that all in my head for 15 years. So it was more fast paced and whatever, but I enjoyed it. And I was lucky because I think the option traders, actually the transition for the option traders, I think it was easier because of that. I think the futures traders struggled a lot more, because I don't think any of the skill sets that you had on the floor were useful for screen trading. Not futures anyway. So anyway, I went and did options for a while, and then for some reason that didn't continue. I was in Gibraltar actually doing that. Then I think I came back to London, and I think I gave broking a go, option broking. I was at FEMAT for a while. And then after that, broking wasn't really for me. I did it for 2 or 3 years, and I thought, this isn't really something that I want to do. So I went back to trading, and I decided to trade futures because I didn't want to get back into a big options book. And I thought, how hard can futures be? If I can trade options profitably, how can I not trade futures? I mean, it's one instrument. If you trade the Bund, it either goes up or down. How hard can it be? Well, it was a lot harder than I thought. I was quite arrogant, really, assuming that we knew what assuming I would be this great futures trader. I was appalling. I put £30,000 into a trading account, and it was gone within a month or two. I had no idea what I was doing. So I quit that. Instead of throwing good money after bad, I quit that and thought, well, I'm going to have to figure out how I get an edge in the market, because I have no idea what I'm doing. So that's when I started learning technical analysis.
So that's really quite fascinating, because we've had a couple of people on here talking about technical analysis beforehand, Clive Furness, for example, and you're here, it has to be said, celebrating your birthday with us on this august episode number 144, the great GAN number, which seems highly appropriate. I'm sure there'll be a rush of technical analysts coming along in about 5 years' time to do episode 360. So quite fascinating, but you're kind of therefore different, because options, as you say, was all about options is about reacting in the here and now to what is the flow in front of you, and finding a way that you can price that to make a difference, and how that's going to work over a series of scenarios by the time you hit expiry. And you make a great point about the fact that it's almost impossible to close your options book down, because once you've really got your options book up and humming, you've got all those lovely Greek letters, which all should be working in your favor. But unfortunately, Murphy's Law dictates that also, strangely enough, once you hit a ski slope or a beach, volatility always seems to do exactly the opposite of what you thought it was going to do. A fascinating rule of options math. But so you came in and you started learning technical analysis to actually understand where the prices were coming from in the first place, or understand trends.
And I'd been in the market for about 20 years at that stage.
I know, it's incredible.
Yeah, and I thought, well, either I retrain and learn how. Because I didn't want to go back to options, so I had to figure it out.
So this is fascinating. So how did you get a foothold? Where did you begin your journey in technical analysis?
Just reading books. There were, I thought, if I remember correctly, it was I'd lost my 30 grand, and we were heading for winter in the UK, and I just thought, well, if I sit here over the winter, I'm going to lose another 30 grand, probably a lot more. I might as well spend that on going traveling. So I'd never really traveled, and I did that, and I bought a load of books, and I learnt technical analysis from a book. So I learnt the theory, but of course it means nothing until you start putting it into practice and get some experience. So that was a long journey as well. And I fell into providing technical analysis to banks and brokers. I remember. Then I came back and I moved back to Gibraltar, Spain. And a friend of mine was setting up a brokerage business, and he said, why don't you come and work for me? So I did. And then I sort of started doing technical analysis for them, and the clients loved it. So that's how my business came about from that. When I left the broking company, a lot of the clients, such as Deutsche Bank, Merrill Lynch, Morgan Stanley, were like, oh no, we like your analysis. Can we pay you to keep providing it? Wow. So I did. So that's how the business came about.
That's really interesting. And so tell me, from that original selection of books, were there any particularly good books that you still have, by your desk today?
No, but I do remember, Steve Neeson was the go-to guy for learning about candlesticks. So yeah, that was very useful. I think before him, really, we all looked at bar charts. So I think he kind of brought candlesticks to the West.
There were two things happened there. I mean, I think, wasn't there? Because Steve Neeson popularized candlesticks round about the late 80s, early 90s. And then within about 4 or 5 years, the systems like CQG and all of the other technical analysis systems, they started incorporating candlesticks, because otherwise, actually, candlesticks are a complete pain in the backside to draw yourself. I'm showing my age here, because originally when I was the technical analyst at Tokyo, I used to have to draw my own charts with a pencil.
I remember those days.
That was just a nightmare. I mean, a nightmare of the first order. So
hilarious.
It's hilarious. Yes.
Within our lifespan, we've gone from putting charts on a graph paper on a wall to where we are now. It's incredible. I suppose we're lucky to have experienced it all.
Yeah, we're in danger of sounding like the 4 Yorkshiremen from the Monty Python sketch. You know, there we were getting up 4 o'clock in the morning to lick tar off the road. But it's true. It is true. It's such an amazing change that's taken place. So yes, I agree with you. I mean, I think the Steve Nyson book was very, very good. Really, really an interesting altogether. And our production team are happily telling us, no, maybe you were more like Stotler and Waldorf from the Muppet Show. I resemble that remark, particularly opposite. It seems to be coming from my wife, who's in the production gallery at the moment. So there you go. That stings. So you read that. So the Nyson books, yes, they were great on Japanese candlestick charts and so on. I think the technology was there to draw candlesticks, and suddenly everybody became three-dimensionally technicolor, as it were, over the candlestick business. What other books or other inspirations did you really find that helped you on your technical analysis journey?
Well, I remember a chart pattern book, but I can't remember who it was written by. But I do then remember things like books like, was it someone Douglas, Trading in the Zone? I remember that one really impacting me because that was my first introduction to trading psychology. I'd been a trader for 20 years, and no, trading psychology just wasn't a thing. You got up, you went to the trading floor, you got battered, or maybe you made some money. And no one ever said, "Oh my God, this is stressful. My mental health is suffering." Or, I'd have dreadful days. I'd go home. I'd sit in the kitchen with the lights off, staring out into the garden. I couldn't even move my head. My neck was so stiff from the stress. And I'm sure most of us were doing that. You get up in the morning, go to work, and you pretend there was nothing wrong, because of course you had to put a face on it. Otherwise, people, if they knew you were losing money, well, they knew what happened yesterday. You're either you're short and it's going up, or you're long and it's going down, volatility. So you had to pretend to put this face on. Anyway, so the point being that Trading in the Zone or whatever it was my first introduction to actually thinking about the psychology of trading. And it is so important.
Well, of course, I think also there was something about being inherently British. I mean, on the floor of the London Stock Exchange in life, nobody was going to talk about their psychology, and it was 97% blokes. So therefore, we weren't exactly getting in touch with our feminine side, as we all shouted at each other and generally abused ourselves all around the floor. And so no, that's very interesting. I mean, yes, getting into the zone, the psychology was quite different. One of the things I thought was fascinating actually was how I remember going to the floors in the USA and meeting lots of traders there, and they all looked homogeneously the same. They were all equally badly dressed with horrible kipper ties, and deliberately endeavored to undo the dress code in a way that would have got you fined were you in the London markets.
But I remember that.
They all had, there was quite a lot of that thinking going on, even in the early 90s, the late 80s, where they were thinking about getting edges. And I remember meeting these guys, there was a couple of guys who were floor traders, and they spent their whole time pre the popularization of candlestick charts, but they were totally into Japanese warrior philosophy. And they were sitting meditating, and it was quite funny. And it was almost, you would almost have wanted to laugh, except for the fact they were about 6'7". And as I well know, neither you nor I are about 6'7". So therefore it was kind of better to just go, that's a wonderful idea, sir. It's quite fascinating. Trading in the Zone, Mastering the Market with Confidence.
There you go.
A Winning Attitude by Mark Douglas. Wow.
I was about to say Michael Douglas, so I'm glad you found the right source.
There you go. Mark Douglas obviously didn't marry into the zone with Catherine Zeta-Jones. That's his one thing. Yeah. Fascinating. Yeah, I mean, really, really interesting books. And actually, let's just have a little break there for a second and go to our book of the week so that you get an opportunity to get yourself a glass of water and think about something. This week, we're talking about, well, something from a guest who was on just a few weeks ago on the show. Fabulous episode, that actually. One of the most popular episodes we've ever done of IPO. A memoir from Ethiopia, ECX and the Winds of Change by Dr. Barrett Kulkarni. Barrett was a man who was part of the leading team that developed the Ethiopian Commodities Exchange, an epicenter for trading coffee and other things under the stewardship of Eleni Gabri-Madin, who has also been, well, she's also a director right now of the ESX, Ethiopian Stock Exchange, which is coming to market in the course of hopefully Q3, Q4 this year. ECX and the Winds Exchange, it's a lovely story. It's a story about the development of a man, a very erudite, observant individual, Barrett Kulkarni. He was a fabulous guest on IPO-VID just a few weeks ago. I absolutely loved having him on the show, and all of the many Indian participants who engaged with us over that show. Have a read of his book, ECX and the Winds of Change. It's a very, very interesting tale of how you go about building markets, and indeed what it's like when, for instance, as he admits, he was an Indian who'd never left India. Well, I suppose, why do you have to leave a subcontinental-sized country before he set foot in Ethiopia, which was an incredible journey of discovery and markets for him. The book of the week, incidentally, that comes up every week on a Saturday in Exchange Invest Weekend, so you can catch that. That's absolutely free. Exchange Invest Weekend from exchangeinvest.com. If, of course, you want to get the whole skinny on the bourse business, as I said, we're celebrating our 11th anniversary of this course of this year. That you can have at $375 per user per year. And you can also sign up for that and a free 7-day trial at exchangeinvest.com. So back to our discussion with Jason. So Jason, you get into the business. You nowadays, you trade simultaneously, and you also have your technical analysis service that goes out to a series of clients on subscription. Tell us a little bit, I mean, how did you manage to get from the wonders of, I'm presuming, Soto Grande and Gibraltar in Spain and Gibraltar to Thailand and Phuket?
Okay, so I mentioned earlier when I lost that 30 grand and went traveling, I went to Southeast Asia, and while there, I found some land, which I thought, oh, this would be a good investment. Anyway, ridiculous idea, but I bought this land on a golf course. And eventually it was time for me to go there and build the villas on this plot of land. It's actually like a private road, so I have the private road with my villas on there. Crazy idea. I'm not a builder, I'm not an architect, I've got zero experience, I'm not even a good interior designer, so I don't know what I was thinking, but took the family, we came over here and we built the business, and managed somehow, I really don't know how, but I managed to pull it off. I was really lucky because I probably should have lost absolutely everything. But that worked, and so we've stayed in Phuket, and we love it here in Thailand. We really do.
That's a fabulous place to be. Absolutely beautiful, Phuket. And certainly over the course of the last 20 years, you've seen an enormous amount of change in Phuket.
Yeah, it's gone from a backpacker island, really, sort of 25, 30 years ago, transitioned to what really is like a very luxury destination now, littered with upmarket nightclubs and beach clubs. And you can imagine I'm too old for any of them, but it is, yeah, it's very luxury hotels. So it's a big change.
Too old for any of the nightclubs. That's your story, and you're sticking to it clearly, Jason. Your secret is safe with us. So it's a fabulous place to be, a beautiful environment, and obviously clearly one which does allow you to be, for want of a better swear word, mindful when you're going about trading and things like that, and helps your psychology. But what is it like for you interacting with the world's markets? Because you're getting up in the morning when a lot of them aren't particularly open or super liquid. What do you actually look at analyzing, and what do you look at trading from your Thai idol?
Well, time-wise, for the service that I provide, at least, it works really well. Because when I was in Europe, I was having to get up at 4 or 5 o'clock in the morning, get all my analysis done by 6, 7, because of course my bank clients wanted it by the time they got in the office, or even before. So moving to Thailand means I can actually get up at 7 or 8 o'clock, or and I don't need to start till a lot later, and I can still get everything out for 3, 4 in the morning UK time. So I'm not rushing through things. I can really take my time. So that really works for me. As far as trading goes, it doesn't really matter because markets are 24 hours anyway. The way my trading system works is that I look for low risk trading opportunities. I'm a trend follower primarily. So if the market's going, if I can see a bull trend, I'll be trying to buy on a correction to a support level, that kind of thing. Very basic, really. And so it's not time specific. If I decide that there's a good support level in gold, I'll put the order in and hope that gold retraces to my buy level. And if it doesn't get there, I won't trade it. I'm not going to just jump in because I think gold's going up. I have to have a low risk entry point where I have a small stop and a bigger target. So a lot of my trade ideas never actually get executed, but as long as 2 or 3 do every day, that's all that really matters.
Very interesting. So your trading is happening while you're not necessarily sitting in front of your screen for 6 or 8 or 10 hours a day then?
Yeah, absolutely. I don't want to sit in front of a screen all day anymore. You know, I've been doing this 37 years, and because most of my subscribers also have jobs or businesses, they don't have the time to sit in front of a screen. So I've developed a system really that suits me and them, where I call it set and forget. So they by the time they wake up in Europe, I've got a list of orders. They can be having a coffee, punching in their orders, and as I say, most of them may not even get executed, but as long as 2 or 3, if 3 get executed, 2 work and one loses money, we've had a good day. We've come out with a decent profit.
That's very good. That's very, very interesting. And so you mentioned the fact that you're essentially looking at low risk trend following trades. I mean, without telling us all of your secret sauce, can you give us an idea of the sorts of indicators? You mentioned Japanese candlesticks earlier. What way you go about your analysis?
Oh, I'll tell you everything because it's dead simple. Anyone could do what I do. I'm primarily a trend follower. So the perfect scenario is finding a bull trend, say like we have in the stock markets or in gold. And as I say, I will then throw on my Fibonacci retracement levels, my moving averages, my trend lines. I will look for candle formations, candle patterns. I'll look at 4 different time frames. I'm primarily focused on the 4-hour chart. I keep an eye on the 1 hour and the daily, and I'll also certainly look at the weekly and the monthly quite regularly. In fact, we had a chat earlier, Patrick, didn't we, where you'd seen a video that I put out recently where I was looking at the yen pairs going all the way back to when we started our careers, so nearly 40 years ago. And when you look at that chart, you see that the yen really has just moved sideways for 40 years, and we could be on the verge of this huge breakout. So that's why you really have to absolutely keep an eye on, sometimes look at even the monthly chart just to be aware of where we are.
Yes, it's incredible. I mean, you're talking about the yen trade, and in fact, also you look at the Nikkei. I think we had a quick review in our offices recently and realized that none of the staff were actually alive when the Nikkei had made its peak in 1989 compared to where it was today. which is quite a stunning one in the stock market. And as you say, yes, the Japanese yen could be on the cusp of some incredible move or some incredible reorientation as we see a total change in that economy. It's fascinating to look at those very, very long-term trends and think about where they can go and where they might be. And indeed, as you say, that's a 40-year trend that's going all the way back to the origins of FTSE futures and even the start of futures markets in Europe, essentially. So tell me, I mean, you mentioned Japanese yen. Obviously, of course, the Forex market, as we know, is the most liquid thing in the world, and that's pretty much liquid, certainly 24/5, if not 24/7. What's your situation with more local markets in, say, Southeast Asia and so on? Have you been looking at any of those, or have you just stuck to Western mega markets?
I've only stuck to the Western markets. I've stuck to my trading is focused around what my subscribers want, really. And as you say, Forex is liquid. It's 24/7. So I can put trade ideas out. I've got subscribers throughout the whole world, so I can't make them time specific. So that's why Forex works so well. It's 24/5, as you say. I like the US stock market, so I do cover them as well. And I mean, the futures do trade 24/5 as well. I did get into crypto, but then crypto really slowed down and I dropped out of it. I know it's sort of reignited recently, and I should probably have another look at those crypto markets. They do, technically, I found they were amazing. Charting Bitcoin, it was one of the best technical markets I'd ever seen. It would almost to the pip. It would hit levels to the pip and bounce. It was incredible. And I guess it's because there's not really anything else to go by other than technical analysis. So maybe everyone was just looking at the same chart.
So just the question of making sure that you were in ahead of where they perceived whether they were going to bounce on that particular support or they were going to take it out. Fascinating altogether. Talking about crypto. do you see, I mean, I'm just curious because we had a couple of weeks ago our biggest show ever with Brian Heintman of Blue Ocean Trading, and he was talking about this fantastic ATS where they're trading American stocks now after hours. Do you think those sorts of things are going to lead to a change in your business, your trading, or indeed how technical analysis is viewed with those longer liquid trading hours for, say, American cash stocks?
Well, I think it's a good thing because for me, as an analyst, I want the best quality data. So I want markets to be open as long as possible. I don't want to have gaps all over the place because the market's been shut for 8 hours overnight. So that's why my analysis is based on the E-mini futures contract when I'm looking at the US stock markets, because I think it's shut for an hour a day. So for me, that's the best quality of data because you do have continuous flow of prices.
Yes, it's so interesting. I mean, I can remember back in the days of the floor and so on. It was actually one of the things I found the best thing was because 90% of people had to close their positions by the time they got off the market, and I didn't, fortunately. Actually, closes and opens were fantastic because if you could analyze the close properly, you could make money quite reasonably easily because the trend would actually go in a particular direction. But there were a lot of people who were, say, short covering into the close on live, coming up to 4 o'clock in the afternoon, that would actually turn itself on its head by the next day because the trend was essentially intact. Whereas nowadays we don't have the luxury of that. Killed a very handy, lucrative niche, actually, electronic trading for me. But it's fascinating how markets do develop over time. And therefore, I mean, one thing I've got to ask you is, I mean, options, I mean, American stock options, egad, how mega liquid are those? Do you not feel tempted to have even a light options punt once in a while?
I have thought about going back into it. I never even thought about writing a course on trading options and that kind of thing. I never got round to it. Do you know what? I don't think I would now, not at this stage of my life. I'm actually trying to trade less. I enjoy doing the analysis. I like that as a challenge. I enjoy trying to help people make money. You know, I get, this sounds a bit silly, really, probably. I get more of a kick out of actually picking the right level and then having my subscribers jump on it. Half the time I don't even trade that level. I might be busy because I've got other businesses and I want to be with my family, and money at this point in my life isn't the most important thing anymore. I can get by without trading. So there's other things to do with my life. I guess is the way to put it.
That's quite fascinating altogether. Well, I think I'm going to give you a little break for a second, Jason, because we've been chatting away. We've got about, well, something like 15 minutes to go in this show. Let's take one of our short videos, ladies and gentlemen, as Jason has a drink of water or whatever he's drinking, as it's obviously evening time as we're recording this in Thailand. Sorry, this is not a live show, but curvature of the earth and all that, ladies and gentlemen, makes it very, very difficult to manage to take somebody who's just offshore from the USA and the Caribbean talking to somebody in Thailand is rather tricky to manage to get our timings together. And obviously when we would normally be live at midday US time, that is of course the middle of the night in Thailand. So videos, we've been doing a lot of short videos recently, ladies and gentlemen. You can find those on Instagram, on TikTok, where it's still allowed, and also on YouTube Shorts, amongst other different platforms. Those are videos where we're trying to capture the essence of trading in some way, shape, or form. We've also been picking up a minute of exciting discussion from some of the leading guests that we've had from around the world. Here's a nugget from Magnus Haglund. He's the man in charge of technology sales for NASDAQ the world over. As you know, NASDAQ power more markets on Earth than any other vendor. In fact, they power almost more markets on Earth than all the other vendors put together. Here's something Magnus was talking about when he joined the show, IPO-VID, just over a month ago.
I always try to ask the question, what is your cost of change? That's traditionally is the biggest challenge for this industry, irrespectively where you are in the value chain, based on the fact that it's mission critical. We don't want to fail in the change, which means that we do a lot of testing and we test and test. But once again, we spend a lot of time on change. That's why the cycle of change is so slow and painful. That's our biggest challenge, is how do I improve business agility as an organization? And that is not just about tech. It's also about our capability to manage that technology. So
interesting. I mean, again, it brings us back to the point, Jason, here, Magnus Haglund from NASDAQ, talking about the change that there's been. Quite incredible. Markets are totally unrecognizable in so many operational senses to what we were originally employed in on the floor and so on. And also costs are so incredible. That's one of the things I think is amazing for those who are trading today, because you can go to almost any broker and pay barely more in fees than you were paying actually as a certified market maker on an exchange 40 years ago.
Yeah, the markets are so accessible now, aren't they? I mean, anyone can become a trader in 5 minutes. You open up an account, send in a copy of your passport, stick a couple of $100 in, and there you go. You're a trader. It's really, things have really come a long way with technology.
Yes, that's a fascinating point altogether. Now, when you're dealing with your client base, so if I understand correctly, you've got kind of a fabulous bell curve of traders and investors who are using your service, all the way from institutions through to retail traders around the world. Is that right?
Yeah. Actually, I'm speaking to one of the exchanges. Just today, I had a meeting with a very large exchange who are going to onboard me to provide analysis for their banks and brokers, and so that's quite an exciting opportunity. I've done that before, but it's been many years since I was providing analysis for exchanges, so I'm quite excited to get back into it.
That's fabulous. That's really, really exciting altogether. It strikes me as a very, very useful add-on as well. So what way is that going to work? Is that going to be a situation of they're going to be recommending that people subscribe to you, or are they actually going to be providing some nuggets of analysis to customers directly?
Yeah, my job is to provide analysis on various different markets, on their markets, which I believe they will then send out to their institutional clients.
Fabulous. That sounds very, very exciting. Well, keep us posted. We look forward to hearing more about that. I hope it all comes through for you, Jason. That's really, really interesting. So when you're looking at the business and the way that trading has changed, and obviously one of the biggest things has been this interweb thingy that allows us to talk around half of the world, and you can connect all these different markets without any difficulty. What do you think are the biggest changes there have been, and therefore what have been the biggest risks for traders and investors in markets these days compared to, say, where they were 40 years ago?
Well, I do remember when we were on the trading floor, and of course we knew the digital age was coming. We didn't know what it would mean. And I remember the way we used to say, oh, one day we'll be doing this from a beach. But we didn't know that smartphones would exist, and you could literally hold a phone in your hand and trade anything. I mean, it's quite amazing what you can do now. I actually thought, I am surprised that I'm still in business, to be honest, because I for some reason, I thought that trading would die with this technological age, and there are so many opportunities out there for people. But I've been surprised in recent years to see that trading is actually booming. So many people from all walks of life want to get into trading for so many different reasons. So I'm excited about it. For obviously, it's great for my business, but I'm really quite surprised, if I'm honest. And of course, then now I'm sort of fearful, really, as to what AI is going to do to this business, because I can't predict it, but it's definitely going to change things. I actually have set up an AI company. I set one up about a year ago. We're not in the trading space. We do something completely different. But I'm trying to monitor it and see how AI will change the space.
It's very interesting looking at AI, because certainly, I mean, obviously we've got a periodical publishing business on the side of building exchanges and trading and so on. And the one observation I would make is that AI is coming up with such utter bilge that I actually think we could have the most incredible golden age, particularly in the early period of AI, because I think AI is going to get it so horribly wrong in certain senses. And you're going to find so many bad analytics coming in. It's a little bit like early technical analysis, where people got the vogue of technical analysis around about the mid 1980s when they were trading, and they would understand one or two things, but they wouldn't, as you say, layer 4 different time areas together. They wouldn't look at 2 or 3 different indicators in order to see, and therefore they ended up, picking, oh, the RSI number is high, therefore we've got to sell it, which is, of course, as we all know, a fatal problem, because the truth is that with normally people using 9-period RSIs, it can actually manage to balance itself out just as long as the market goes sideways for 2 or 3 hours if you're going intraday.
Oh yeah, that's another thing I learned the hard way. I learned everything the hard way. It was losing money that taught me. So you're right.
Yeah, it's quite fascinating. I think the other thing that's obviously incredible is, as you say, The breadth of participation is incredible. I mean, I can remember being at conferences in the late 90s, and we were talking, so before the electronic age took place, of, how many people trade futures in the world, and we were all reckoning, oh, it's probably a very large football stadium or something like that. And then within a few years of the turn of the century, you had people like IBKR, and they've grown exponentially since then, announcing that they alone had 250 or 500,000 different clients, and that led realize just how huge the market was, and concomitant volume. I mean, look at you can remember the days when, if you were on the floor and you saw particular contracts doing 10 or 20,000, that seemed absolutely incredible. The Bund struggling to get through 100,000 contracts in open outcry because it was just fundamentally very, very difficult to do. And you look at all of those contracts today. I mean, this in an era of super liquidity, they're all doing hundreds of thousands, if not millions of contracts per day in an electronic market, which is quite amazing.
Yeah, true. I mean, some of the stories that came out from the new breed of traders that were screen trading at the beginning of, in the noughties, and it was just incredible how these traders had advanced so much from the floor. I remember some of the heroes from the floor, but some of these guys were clipping 1,000 bunds, 2,000 bunds. I mean, I think even more than that. I was like, geez, these mega traders.
Yeah, it's quite incredible. Whereas if you were on the floor and you managed to, you would build yourself up possibly in certain things. I mean, the very largest traders would be building up to say several hundred quite often or something, but they would be building it up. And as you say, doing clips of that sort of size seems absolutely mind-boggling in this day and age.
Yeah, it was incredible.
Quite incredible. Yeah, it's a fascinating way that the markets have developed. So, I mean, looking back on all of that, I suppose what would be the advice that you would give, your younger self? If 18-year-old Jason Sen reappeared at your shoulder, what would be the 2 or 3 things that you would immediately tell them to adopt to a world of trading in 2024?
I think I would have told myself not to drink so much in my 20s. That would have been a good start. God, I don't know. Do you know? I've never really thought about that question. What would I say? It's a difficult one, really, because things changed so much throughout the 90s and the following decade. My career was so varied. I'm not sure I could have said something to myself that would have, I don't know, for example, kept me just as an options trader.
Interesting. I mean, go on. Sorry.
I would say to new traders now, focus on the psychology of trading, focus on what's going on in your mind, the discipline, the patience, controlling your trade size. Don't be greedy. Understand that you're not going to get rich quick from trading. You probably won't get rich at all. You might create a very nice revenue stream, but that isn't going to happen for probably 2 or 3 years at best. So yeah, it's a long journey.
I'm going to draw a parallel here, which is, I think it's quite fascinating, because what you're essentially saying is you're now sitting on a private road in beautiful Phuket overlooking a golf course, and actually trading has become a lot more like golf. It's not actually that difficult to do one trade or hit a golf ball, but when you try to string it all together over 18 holes, suddenly it becomes really a mind game as much as it is a physical game, if not more.
Yeah. I remember being on a podcast last year, and the guy, the interviewer, said to me, "Yeah, just because you sit in the cockpit of an airplane doesn't make you a pilot." And I quite like that one. And just because you can buy a fast car doesn't make you a great driver. I have a fast car and I'm an appalling driver. And just because you open a trading account and put $500 in it doesn't make you a trader, actually.
Yes, I think that's a very appropriate point. And always, I mean, I can well remember my early days in brokerage, where I have to say it's probably one of the least gifted brokers ever to walk this earth, but I probably wasn't too bad as an analyst and a trader. It was fascinating to see. We had a lot of clients at that stage from the Middle East who had huge amounts of money. And for them, it was more about the thrill. They would spend all of their days, they'd lose all the time. They were net losing money, but the cash flow was so fantastic. He was saying all they were really interested in was the idea of having a winner, because they could go and socialize with their mates and say, I got the S&P right this afternoon. Right. Nobody mentioned the fact that they'd essentially subsidized the market to the effect of about 4,000 ticks before they managed to make 100 ticks in profit back again, which is quite interesting, a fascinating episode in cash flow management.
Well, some people do trade for entertainment, and there's nothing wrong with that. If you're trading for entertainment and be honest with yourself, I'm doing this for a bit of fun. If I lose, I can afford to lose, let's say $500 a month. All right, great. It's like going to the casino or the horses. But don't kid yourself that you're actually trading and you know what you're doing. Just be honest with yourself and say, I'm having some fun.
Yes, I could well remember one evening after a Swiss Futures and Options Association board meeting, and I think I and the two sort of young bucks of the board, we were both the people who were unmarried and under 7,000 years old or something, ended up, strangely enough, in a Swiss casino, I think, somewhere. And I can't even remember whether it was Geneva or Lucerne. But anyway, we ended up in this casino. And the most interesting thing was that we walked past the slot machines. And there was, in fact, the manager of a Swiss, major Swiss pension fund. And my friend, who was Swiss, had recognized him and said, "Wow, that's really funny, isn't it? That's a bit of an odd way to enjoy yourself." And my view was, I think that's the most damning advertisement to avoid that pension fund at all cost. If I was one of the staff or employees, I couldn't think of anything worse in terms of anecdotal due diligence. You see, oh, look, there's our pension fund manager, slot. I mean, there's a difference between that and being spotted, as I think most of the live floor were at the horses on a Saturday afternoon, when they were clearly enjoying a little bit of a gamble and a flutter and an opportunity to let their hair down. But
I couldn't believe how there was this core of traders from the floor, and they were very successful traders.
Yep.
And they were down the casino most nights. I mean,
yes,
it just baffled me. You trade all day long, and I'm sure they were making 5 figures a day. And then they go straight down the casino.
Well, actually, I can remember the opposite of that, which was there was a guy who, while he was trying to trade, he was always losing money, but always losing small amounts. And he used to go to the casino, play blackjack to make enough money to bolster his account to go back the next morning. And there was this sort of wacky backwardation of a market in sort of cashed checks, because sometimes people were basically funding him. So they would give him a check for 500 quid. He would go along, hand the check in, which they marked as basically being cash. And at the end of the evening, you'd go back and buy the check back, and then he'd come back to you the next day, hand your check back, have the cash, which he put it into his clearing account with one of the Dutch clearers of locals, and carry on trading, which I also thought was quite fascinating, because I sort of also thought, have you ever thought maybe of doing this the other way around? Just don't do the stuff during the daytime. Make yourself a modest stipend from playing blackjack. Until you've built up a nest egg, and maybe you'll do something different. Anyway, you're absolutely right. I remember well, yes, going horse racing in the UK was incredible, because it was like a live floor day out. You'd be standing there and suddenly you go, oh, I know him. Oh, I know him. Oh, I know. Oh, hello, Sid. Hello, Fred. That's quite incredible. So anyway, I mean, we could reminisce about this for many years to come. So your trading analysis and so on, hopefully that's come up on screen somewhere, that people can manage to read that and find out where to catch you. That will come on screen in a second. But now I have to ask you that magic question that we ask every guest at this point in time. Jason Sen, where do you think the capital market revolution goes next?
Oh, that's a tough one. And I think it really is all down to AI. I really do. I think that's going to be the next big thing. Was the next big thing for the whole world, isn't it? And as I said earlier, I'm trying to figure out how it's going to work, and how it's going to affect what I do. Probably kick me out of my profession, because at the end of the day, I'm pretty sure AI is going to be able to analyze markets better than I can.
Very interesting. I think it's intriguing, because a lot of people talk about perfect markets. I'm not so sure we're going to see perfect markets so soon. I think you'll manage to do a little bit more in the meantime. But you've got a great portfolio business, Jason. I hope we'll get a chance to catch up again and talk about maybe some specific markets someday, or some of your other entrepreneurial activities. That'll be really great. Ladies and gentlemen, you got the details there of how you can connect to Jason in the show notes. Next week, we're going to have our regular guest coming back, Rainer Zittelmann, probably the most prolific man I can think of around financial markets. markets and the thinking they're in these days. How Nations Escape Poverty. That is going to be a great show. It's a fantastic book. He's coming up on the 28th of May at midday. That will be a live show, ladies and gentlemen. It only remains for me to say thank you very, very much to our production team today, to Jamil, Marianne and Beata. You've done an absolutely fantastic job. Our guest, Jason Sen, it's been marvellous to have you on the show. Thank you very, very much, Jason. We look forward to monitoring your activities in the future. We wish you many, many thousands of profitable pips for you and your clients. My name is Patrick L. Young. Thanks for watching this epic GAN number 144 of IPO-VID. We'll be back next week. I wish you all a great week in life and markets.